I mean, absolutely. Like, so here's the other thing that you kind of touched on is that in in like the supply chain world, what we would call that is, you know, uh, an an impact order or unanticipated demand shifts, right? Whether that be up or down. And so when you're operating with super thin margins because you've optimized so tightly, you don't have anywhere to go, right?
Well, and it's not just impact orders. It could be
That's
equipment
why I said
breaks.
it can be impact orders or it can be like a demand shift.
Right, well, but it may not even be demand shift. It may be a production event that disrupts your ability to produce. Like if you lose 2 shifts or 2 days, so 4 shifts, because of something goes on with your
Sure.
plant. There's all sorts of things. And then you're going to now struggle to gain that back. You're going to struggle to make up for it. You're going to struggle to meet that demand that can ripple through your entire business. And if you're so tightly optimized, and you're so tightly optimized with your suppliers and your consumers, and everybody in the chain is optimized, the entire economy, this ripple can easily amplify and build and trigger others and just propagate throughout the whole economy,
Oh, absolutely.
which I think we're starting to see. Like we were talking a lot about the
I don't know how much we're starting to see it from that perspective, but I do think that per the
what
conversation we had earlier, that there's a lot of economic factors or indicators that are all pointing at a fall in the autumn.
yeah, I'm gonna try and pull this up, but I think it's the same thing because yeah, fall in the autumn. Um, like I think that it's the same kind of principles, but in finance, right? You're not
Yeah,
trying to do
absolutely.
efficiency. You're trying to be efficient with your money, and then if you have a lot of things go bad all at the same time, that can cause a cascade failure. But I pull it up. Some of the things you're pointing at, they're indicating a September, August, maybe October kind of
Yeah.
blow up. I mean, because we have the yield curve inversion 2 and 10. You could probably explain that a little bit better than me.
Yeah, so the yield curve inversion generally refers to the 2-year and the 10-year treasury bond um, inverting, where you have a higher rate for a long term than you do for a short term. And so when that's inverted, then that means that your your long term is yielding less than a short term bond. So why would you invest your money for 10 years when you get a higher yield for in only investing it for 2, right?
Right, and
And
usually that indicates that there's going
part
to
of
be
that
a rough
is
patch.
part of that is that what that is, it's a long indicator. So that ends up being an indicator that historically has indicated that there will be a recession in roughly 12 to 18 months.
So it's sort of a market. It's saying that the market believes that there's going to be a significant economic downturn very short.
Yes. Well, it depends on what you consider very shortly. I mean, 18 months is yield curve inversion. That happened February, March of last
Right,
year.
right.
But if you do the math on that, 18 months out, August,
What?
September this year.
Yeah, that meant that the start of this signal was March. We expected a recession kind of March this year. Didn't really get it. But that's expecting that by October we'll have gotten that crashing point.
It's kind of the
Um,
estimation. But again,
but
it's a leading indicator.
we're also kind of waiting on the reversion to that, right? That's usually indicating that you're entering the recession, right? Because they're now seeing that,
Well,
right?
historically, that's been a 3 to 6 month indicator.
Unless there's like a
When the
double
two and
recession
ten
coming.
when the 2 and 10 revert, the problem is that you have the government and the Fed and the Treasury and everybody is working together to try to put this off and hold off on it as much as they can. Because what you actually saw is you saw the 210 uh, ratio started coming back up towards the zero line, pushing for an inversion, which would have happened probably 2 or 3 months ago. And then it started going back down again and actually hit one of the highest rates that it's ever been. It was inverted by a full interest point, 100 basis points.
That almost sounds
It's
like you
huge.
have one recession that was then stepped on by a larger one.
Well, yeah, I think all you did was delay it, and what ends up happening is you compound those issues.
Right. So like it wanted to return, and then you'd have your recession, but they delayed it, making it worse.
What happened 2 or 3 months ago?
Been a busy year.
3 banks.
Oh yes.
Three banks
Oh yes, that was
collapsed
three.
and were bailed out, and then the Fed put together a whole new tool that they've never had before in order to give operational liquidity to banks.
Right.
And what most people aren't paying attention to is that those 3 banks combined were larger than the 2008 crash. Larger.
Yeah, I mean it's hard to measure because of it was kind of more drawn out. But yes, I looked at it. It's at least a significant chunk of however you want to define the crash.
And
Because a lot of banks failed later, given that. But that puts in like you talk about the banking leverage cycle looking to
yeah, so
come due
that
right
that
around.
actually kicks into the other thing. We're seeing commercial real estate that's having problems, to the tune that there have been one, two, three that I can think of, 3 instances where a borrower or a renter, I think it was a borrower, just walked away.
Oh, I just saw
Like
some
didn't
stuff today in
didn't
Atlanta.
even. Oh, that's new. I'm
This is
talking
no,
about.
literally, this happened today, where
Oh,
you had a
nice.
bunch of hotels in Atlanta walked away from. I want to say, let me see if I can pull it up, but it was
While you do
uh
that, here's
walked
here's
away
the
from 19, keeping 15
19 keeping 15.
properties.
Okay.
They
How
turned in
much?
the
How
keys
many
on 19
dollars is that?
properties.
Was it hotel
Um,
properties?
hotel properties, large ones.
Okay. Yeah.
So it's
So that's what
like
happened
it's
in California, right?
oh
You had like a
malls.
Hilton, you had a mall, and I can't remember what the other one was. But what's funny is that those, not funny, what's interesting is that those happened, the timing of those and the timing of the bank crashes happened to coincide with commercial real estate releveraging, because commercial real estate, for people who don't know, they only get like a 1 year, 2 year, 3 year note, and then they have to refinance the balance of whatever they owe. And so the number two and number three largest recapitalization months were the same 2 months that we had bank crashes earlier this year. The number one month for recapitalization happens to be coming up. And I
So
can't remember if it's August or it's September, but I think it's September.
to clarify, so you're saying that with because the walking away from the mall and all that stuff, I believe that happened after the banking the banks failed.
Yes, those did
But
happen after the bank failed, but
but it
it's an
corresponded with
indicator of.
right. It probably corresponded with the releveraging of it, and they saw it
Correct.
on their books. Didn't look good. Yeah,
Yeah. And I mean, like, these banks have been, they're coming out and saying like, hey, we tried to work with these people. Like, we wanted to renegotiate, make numbers that would work for them. And these people are saying, I don't care what numbers you throw at me. I don't care. You can have the keys. You can have the property.
Right. It's I can't make money with this. Like, I can't, like, if they can't make money, they can't make money. It's no longer an asset, it's a liability.
Right.
And so it doesn't matter what what deal you can get. Sean, how much would you pay for a liability?
Well, it's interesting that you asked that question because every homeowner in the US has been told for years that their house, their home, is their biggest asset. And so that people who aren't aware, that is wrong. Your assets pay you money every month, or at least gain in value and don't cost you money every month.
Yeah.
Your liabilities cost you every month. And if you don't believe that, try buying a house this month and then selling it in 2 years. Because what'll happen, if you go back, you can look at the numbers, it's all there.
For the
When
record, don't do that.
yeah,
That's probably a bad idea.
that is bad. That is not, again, not financial advice. Just saying, if you don't believe me, like this happened in '08. People were buying at the top of the market. They were buying with high percentage rates, just like we have now. And they were like, oh, it's no big deal. I'll just refinance it later, which would have been fine, except for home values dropped, depending on where you were at, somewhere 30 up to 50%. So if you bought, even if you didn't buy an extravagant home, say you bought a house that was $300,000 or $400,000, and it's now valued at 150 to 200,000, you're underwater on it. They won't refinance it at all.
Mhm.
Period. They don't care.
Yeah.
So
I
there's
it's
no sense in doing that. And that's a problem. And
well, and
that's
didn't
the
you
issue we're
say
going to get into.
didn't you say something like the something about individual like consumer saving rates are going to net zero soon
Yeah.
too?
Yeah, if you look at the
Yeah.
trend, you look at the graph for consumer savings, those dollars are going, they're pointing at zero, pointing at August, September.
And that's going to happen before their biggest asset goes belly up.
Oh, absolutely. And the
So
other thing that's been
you can
going on
imagine what
that people
saving rates are
haven't been
actually going to go
paying
to.
attention to is revolving lines of credit, aka credit cards, have been skyrocketing.
Well,
They went from,
wasn't there COVID rules to help facilitate taking on more revolving lines of credit? Or am I
I
making
don't
that
know
up?
about that. I'm not familiar with that.
Okay.
But,
I could be wrong on that.
but that has skyrocketed from, I think, 300, I can't remember. I want to say it was 300 million to now it's over a trillion. If it's not over, it's just like touching it.
I
It's
mean,
huge.
well, and that's what happens when you tell everybody this is temporary, this is transitory.
Right.
They don't they don't change their habits, they don't change their behaviors. They put on their credit card until they can figure out how to do it. And I think it seems like our labor force has also gotten a lot more passive when it comes to demanding more money. They're just expecting social pressure to do it or something. But
Well, no, for a long time, nobody asked for more money because they were in good shape and so they were just fat and happy. Like they were too comfortable.
well, sure. I mean that
Like
I'm
you were seeing
comparing it to
years,
like last time things were rough.
right? But you have to remember, humans as a species have the memory of a goldfish. Like they don't remember,
Yeah.
and actually a lot of the people that are younger don't remember it because they didn't live through it.
Well, but
They didn't have to
even
deal with
then,
it.
I just think that the temperament of the labor forces in the aggregate is much more passive than it was in like '08. No?
Nah,
You don't think so? Maybe I'm
not
just
as a
exposed. It
not as a
seems like the
general
youth
rule.
is, but maybe I'm,
Well, the youth doesn't remember '08.
which is, yeah, and that's what I'm saying. Maybe
And
that's kind of my
if you
point
think
is I may
about it,
be
they don't
biased in my
have,
sampling.
yeah, if you look at the youth, like they don't have expenses. They don't have these huge, They don't have mortgages, they don't have car payments, and if they do, they don't have all of the, children and all these other things that add up over time that people take on over life, right? So if you look at it from that perspective, they have a bunch of excess income. So why do they need to go fight and argue with somebody about getting more money when they're living high on the hog? Like they can buy whatever they want, they get to go play with their friends, they can afford their Starbucks every day.
But they
And
can't
part
imagine
of
losing their job because the last 4 times they went looking for a job, it was easy.
and part of it is, in addition to that, they haven't had to pay their student loan payments, which,
Oh
by
yeah,
the way,
that's
they have to
September.
restart paying those August and September. Yeah.
Yeah, and
And
but
and
Sean,
they're not getting the
surely,
$10,000 or $20,000 that was gonna be wiped off of their bill. And my grandfather told me something one time, and I never believed him until I got older and really like sat down and realized it one time. He told me the expenses always rise to meet the income. And I was like, there's no way. Of course, I was 18 and knew everything, right? And I was like, Grandpa, like, there's no way. Like, if I was making $85,000 a year, there's no way that my expenses would rise to meet my income.
I mean, mine didn't,
I
but
and in fairness, right? Like, I
but
don't. Mine didn't rise to meet my income at all times, but there have been times in my life where I have spent every penny that I was making and wasn't saving anything aside. Now, that's no longer the case, and I'm, you know, stashing basically half my paycheck, but that's different and it's accurate. And most people are not aware enough and are not paying attention enough to realize that this is coming and it's going to happen whether you like it or not.
you're not so obvious. You're not seriously suggesting though that people
No,
didn't just keep stashing away their student loan payments just in case. Like that'd be the obvious thing to do was just to keep putting it into account and letting that money in, like you put in a CD or something, gain 4%,
they
right? They
definitely,
obviously did that, right? No,
yeah, they
no.
definitely didn't go buy boats. They definitely didn't go buy cars, which, by the way, saw an article the other day. We are at the highest rate by percentage of people with $1,000 a month car payments in history.
$1,000 a month car payments.
Mhm.
The
Yeah,
fuck?
yeah.
Wow.
Coincidentally, on that news, repos are up.
Gee, I wonder
I'll
why.
definitely not. I mean, it's just correlation. I'm not saying it's causal, but and they're going to get worse.
Yeah.
It's going
I
to get
mean,
real
it's
bad. Like the
well, you're
if you
saying the
go look at
like you're saying
go
the
look
used
at new
car market.
cars.
Well, but the
Well,
thing is, like,
used car
new
market's
cars.
actually starting to come down.
That's my point. Like, that is another signal that this is starting to get bad because used cars markets are a substitute. And for those
Uh
that
huh.
aren't familiar, you go economically, what you see is as the economy goes down, even if it's just a little blip, people switch to substitutes. They switch to chicken instead of beef. You know, they take less lavish vacations. They do all of these sorts of things.
Careful.
And
You're starting to sound like the people at our government who do the CPI.
but they go into these substitutes. Well, but what happens is depending on the substitute, like obviously food, you just switch substitutes more and more because you have to eat. But you don't have to buy a new car. So what you see is at first the this substitute market will go up, and then at a certain point it'll go down because people just aren't buying at all. They are
You know what?
delaying purchases. They are
You want to know
waiting
what
until
an F-150 cost right now?
new used.
New, new.
What?
Most of them that I've seen have been somewhere between 80 and 100 grand.
Oh, that's cheap.
No,
No?
no. An F-150?
I thought
An
they're going to be like
F-150 should be like
120,
$45,000.
Really? Okay.
150. Regular half-ton 150.
Oh, without maybe it's just whenever I look at like features and stuff, it gets up to 120, 150.
If you're looking at a Ford Raptor, maybe,
No, I just thought I remember
or
looking
a
at maybe
Platinum,
maybe this was
there
in inflated
now there
numbers,
was
but
a time when things were skyrocketing that what was happening is they couldn't get new vehicles, and so dealers were adding dealer markup.
Mhm.
A market adjustment is what they call it.
Mm.
And so they were just, and people were buying them. I looked at it and I was like, there's no way. Like I was looking because I wanted to get a Super Duty, and like I, I don't need one.
Yeah,
I don't need one. I could use one. Like I could definitely use one, but I don't need one.
I
And
mean,
I wasn't willing to pay. I mean, those things are 90 to 100 grand, like just
yeah, and maybe that's what I
baselines.
was looking at
It's
there,
nuts.
because I mean, I've got a bunch of land. I gotta be able to get equipment, and so I want something that actually tow a reasonable amount.
Yeah.
Um, but
But they're
that is
just
not in the
like
budget.
parking lots are filling up at dealerships, new car dealerships
So
specifically.
if I get
And
this year's model next year, it might be real cheap, huh?
no,
No?
give it, well, just watch it. I would say just watch it.
Okay.
Watch the market because that may be the case. Um, but you got to figure that like this is about the time that the next year model starts hitting the dealership. So all those trucks that are sitting out there
Mm,
now, they're fixing to become last year's model.
right. Right. And my guess is they've already figured out how much of next year's models they're going to make.
Well, that has happened. You've had several of the plants have had intermittent shutdowns because they've got too much inventory and they don't need to continue building. Um, so you've got that, and then on top of that, what you're going to have is you're going to have an excess of inventory. But they didn't want to reduce the prices in their vehicles, so what they did is they increased the MSRP on the next year's models. That's what they did 2022 to 2023. They're going to do it, I think, again 2023 to 2024. It doesn't matter. I don't care what you
Is
say the
this
MSRP is. There are people that will buy it, but it doesn't matter if they can't afford it. Like,
and is this all part of could this all be part of getting people used to not owning a car?
I maybe I think it's probably more likely the vehicle companies have short memories, and they're like, well, we got these people to pay these prices. Like, no, you got some people, some dumb people probably to pay those prices. And I think I'm trying to remember who it was. I think it was Jeep or Dodge that actually came out and said, we're okay with selling less vehicles because the markup that we'll make on each vehicle will make the same amount of money. We don't have to sell as many vehicles.
I mean, I could believe that. I could
Which
believe
is
that they're that they could take a significant hit in sales if they're that pricey, which I mean, some people they just need the vehicle. Now,
right.
I don't know why they're not buying used. I
Yeah.
mean, maybe they couldn't get the. I don't know. I mean, it seems.
The problem with that, the problem with that theory is you've got so much competition in the market that somebody's going to start hurting and they're going to undercut you.
Yep.
Like if Ford, which I think Ford is actually built up to be able to produce way more vehicles than Dodge or Chevy and maybe combined. Because the Ford F-150 has been the nation's number one selling vehicle for years, like
Yep.
decades,
Yep.
right? Okay, well, they could crank that up and just ship them out the door because they need to cover overhead. Because dude, those trucks sit on on that lot for so long, and you got to start paying on them.
Well, and
It's going to
they
cost dealerships thousands, if not hundreds of thousands of dollars.
and if I recall correctly, Ford made kind of a bad bet during the chip shortage due to COVID supply chain issues, where all the other companies stopped making vehicles, but Ford's like, "Nah, we'll just keep making them and we'll get chips later." And I
I don't
don't,
know
as
if that
far
was
as
a
I
bad
can,
bet or not.
I mean, they probably have tons of inventory as a result, because I don't think a ton of I didn't get the sense that there was a lot of, like, a glut of purchasing after that, but maybe I missed that. Like,
Yeah, I don't know.
because it's
I honestly, I'm not sure, and I couldn't even speak to it because I don't have any information on it whatsoever. I haven't
yeah. I
heard
mean,
about that at all. I
I'm
do
sort of
remember
guessing.
seeing like there were huge, enormous parking lots next to the factory there in Kentucky, I think.
Yeah. Well, I mean, you had a
That
lot of malls renting up parking space to these guys because no one's going to the malls.
Yeah, so they were just well, this one actually was I want to say it was a derelict track, like a
Okay.
NASCAR track,
Right.
and they had trucks on the track, on the infield, like the entire parking lot. They had it all just packed full of what looked to be Super Duties, not even F-150s, but they might have been.
Yeah.
Um, and my guess is, I think a lot of them probably diesels. There's something
Mm.
different about the diesels because when you couldn't find those Super Duty trucks, and when they were really scarce, the ones that did come on the market were all gas engines. Nobody was putting out hardly any diesel models,
Okay.
which I thought was really odd, and that's why it stood out to me.
Is it is it maybe they require a specialized chip? They're
Maybe.
hard to get. Because I mean, we're
Could
still
be.
having supply chain issues. So the idea that they suddenly fix their chip supply chain is seems odd, because it seems like
Yeah, I don't know.
everybody everywhere is having supply chain issues.
Yeah, and then what do you do with those vehicles? Like those were built in 2021. You're not going to turn them out as 2024 models, right?
I
It's going to be real
well,
hard to sell that.
maybe 2024 and a half. I don't know.
They've all got VIN numbers on them, so you have to have them dated as to when
Mm.
they were manufactured. So if you've got a 2024 model with a 2021 date of manufacture, people are going like that'll start lawsuits. That would be my guess
Yeah,
because that's misleading to the public.
I don't know. We'll find out.
I would think, but
So,
I think
given that
that's going to
things are
be
about to, given that the fall is coming, what can we do about it? What should we do about it? What is it? Some advice you'd give people?
me personally. My advice, and I've been preaching this to all of my friends, anybody that I know, anybody that would listen since the 2 and 10 inverted, and that is stack cash, stack cash, stack cash. And how you do that is you eliminate any non-necessary expenses. That means cut off Netflix, you don't get Amazon Prime, you don't get you don't go out to eat, nothing. Like you cut every cost that you can as much as possible and put cash away. Don't buy any
So,
don't no major purchases. If you have like retirement accounts, convert them from, high yield, which is usually in stocks, to something that is much more risk averse, which would be like bonds.
yeah, I've been setting up for bonds. Found out how to do that with Fidelity. Um, so to clarify though, what you're saying is if you are in stocks, index funds, crypto, that you probably want to find a good exit strategy and get
Quickly,
into cash very soon,
real
in the
fast.
next 30 days max.
Mhm.
Like, you got to think of like August 1st, in fact, so less than 30 days. August 1st should probably be like, you should be out by then, is your goal.
I mean, sure, it just depends, right? It depends on what your tolerance is, right?
Sure.
And this is one of the things that I tell people every time that I talk about finances. One, you have to know what your risk tolerance is, and two, how much time and energy are you willing to dedicate to paying attention to the market and realizing what's going on. For me personally, it's about capital preservation. I have been out of the markets for, I don't know, 3 months now because I saw that this was coming and I didn't want to get caught holding the bags. It doesn't matter how good your portfolio is doing. If the stock market drops 50%, your value is now 50% less.
Yep.
If you track 2008 crash, it crashed over a total of 4 months,
Mm-hmm.
and it took, I think it was 6 months and 18 months, right? Roughly.
Okay.
6 months down. It took 18 months to regain back to where you were.
Right. Okay.
So
Yeah. I
we're
mean,
talking about 2 years
makes sense. I'm
round
taking a
trip.
little more aggressive strategy personally, not by much. Like I'm mostly in cash, but I'm also looking at things that are, I think, going to weather the storm a little bit better and trying to time that. But
Such as,
um, some dividend stocks where I
sure.
think they will bounce and recover, and they're going to continue to pay out regardless of major economic downturn or do better potentially. I'm looking at things that are sort of natural hedges against the market, things that are taking short positions relative to funds that are more in line with thinking of the market. So as traditional holdings drop, those should go up. Um, the what I've noticed is like defense stocks don't seem to be as impacted by these sorts of things and tend to be more in fluctuation with things like, I don't know, um, a big government order to build back their stockpile of munitions, let's
Yeah.
say.
I mean,
Um,
yes, but I
but
here's the other thing on that. I don't think that they'll be immune.
no, I
If the
think they're
stock market starts cratered, like the rest, say the rest of the average of the stock market goes down 50%, they may only go down 25 or 30.
sure. But
But they also pay
and
good dividends, if I
yeah, it's not.
recall.
Some do, some don't. Depends
Decent,
on the.
yeah.
Some are surprisingly don't pay out that much, but that's kind of what I'm looking at, and I'm keeping my eye on it. I don't. It's not a huge chunk of my portfolio, so if it goes down, I can handle it. But I sort of along the bet of we're going to have. I'm basically betting that it's part of the economic downturn that the government is going to put a big influx of cash, and part of that is going to be in building back munition stockpile. Not
Hmm.
sure when that's going to be, but would not be surprised if it's this fall or winter.
Yeah. So
But
correct. And to be clear, like the other thing, like I'm not trying to hit the very bottom of the market. I don't. I I can't call the top of the market. I can't call the bottom of the market.
sure.
Right. I'm looking at most most of the move. That's the reality. So if I feel like something's dropped down, and I still have some money in certain things, but most of everything that I have is sitting in cash right now because I think there's going to be better buying opportunities. And if there are, then I'm going to increase my positions into those at a better buying opportunity. Again, capital preservation and the ability to maximize your profits. The other thing that I'm watching is, so one of the quick indicators is usually your Fed interest rate, right?
Mm-hmm.
So they did a pause last month, but with the notation that you just remember we're going to increase it. We're going to keep going. Well, Jim Cramer tweeted today, higher and longer, which means I took that to mean that he believes that interest rates are going to be pushed higher and stay higher for longer. Which, if anybody understands how Jim Cramer works, I think that's probably going to mean that they stay flat or go down. And it's, I bet we stay flat to the end of the year,
I
and
thought
then
he was talking about
or
Hunter
close
Biden.
to,
I'm
and then
sorry.
well,
That
yeah,
makes more sense.
yeah. I can see how you could be confused about that.
It's topical.
But yeah, well, I think it's uh, nasally ingested, not topical. I don't think it does
Well,
anything
actually,
on
I
your
think it works
skin,
both ways, but
but it
they
might.
tend to do more nasally, but it does work topically. Um,
Or so you hear.
tingly. So I hear. So I hear.
Yeah. Yeah. So anyways, so that's how that's going. That doesn't seem like that's a good thing. Uh, Historically, whenever the Fed has paused raising rates, they have there's been I think there's been one time that they started raising rates again.
Yeah, I think
And
we established that things are
so that's
the fall is
probably
coming.
how that's going to go. And amongst everything else that's going on, like, oh, the one that came out today, BRICS is introducing their new currency, gold-backed currency. Guess when
Yeah,
that one comes out?
September,
August.
August. Oh, so close.
They have
Let's see if it
a
actually gets out in
conference
August.
in August, and they're going to be announced. I don't know that it's necessarily getting released. It's being
Okay,
announced, which just the
but
announcement alone will shake markets,
yeah,
generally
I mean
speaking.
that what the it'll be interesting what gold does then. I don't think it's. I don't think they. I think they've probably been purchasing over the course of this. So
They have been.
right, it's not like there's gonna be a sudden flux of them trying to buy, but I think a lot of people will be. There might be some market activity as a result of this, but
Newsflash: Russia's been increasing their gold holdings
it's been for like a year and a
since
half. No,
since
wait, what year is it?
2014.
So since 2014, I thought there was a very recent increase of that
Well,
too. But I,
they
yeah,
did a year and a half ago. Whenever we put sanctions on them, they basically pegged stuff to gold by offering X number of rubles per gram of gold.
okay.
Anybody that
Oh yeah,
wanted
there
to
was like,
sell to they were just buying gold.
I guess you
And
want
people
to
were like,
get
"Oh,
gold.
why are they buying gold?" And then some folks started looking into it, and they're like, their gold stash was kind of flat until 2014, and then they started accumulating at a fairly rapid rate. Just happens to coincide with a Maidan coup in Ukraine. Not, I'm just saying it's a correlation, not necessarily a
I mean, it's
causation.
if you're worried about an economic hitman and destabilizing your currency, that's a pretty good hedge against that.
Or if you expect that sometime in the future you're going to get sanctioned, guess what
What
is
has,
a universal currency that nobody will say no to?
yes, but and there's some recent discussions among some smart people on Twitter around whether or not gold will continue to be a good store of value long term, short term in terms of next 5 years probably. But there's there's a lot of people that are call them renegade in finance, but fairly knowledgeable in it. So they don't toe the party line and things
Yeah.
that are just like, look, the reality is that gold is now a terrible currency. It's a terrible a gold backed monetary system is just doesn't work in the modern era. Um,
Why not?
the the short answer is it's complicated, but it's based primarily around the depth of liquidity that's available in modern currencies versus compared to gold and what that would do. Um, not to
Well,
mention the
but it
digital age of
not
banking and
being, yeah, but not being used as a currency, but being used as a backing for currency or as a store of value. Gold hasn't been used really as a currency much in
what's the difference?
centuries.
Well, I don't mean there's a literal like I'm going to physically transmit gold, but if it's backed by gold, fundamentally, what's the difference?
Well, because that that is a that is how you store the value that you've created, right? It
Gold
has an
is
intrinsic, yeah, it has an intrinsic value that people agree on, right? As a general rule,
okay.
across the globe, it has a use case. So it's used in a lot of different things, from jewelry to manufacturing processes. It's
Yeah.
utilized,
Hmm.
but it has always been something that has been used as a store of wealth or as a show of what you're you know wealth
Right.
has been, but very rarely in a couple hundred years has it actually been used as a currency.
Well, I think it'll always be a store of value simply because it's durable, it's
Hmm.
pretty, and it now unfortunately it's starting to have a lot of other uses that are functional, such as um, like connectors and even some medical uses. I think where it's we're starting to find truly practical uses for it. Whereas before it's a soft, malleable metal that's pretty was the way it was for a long time.
Right.
So it
Well, a
being
lot of
super
times,
expensive is not that big of a deal.
right. And a lot of times what we do is we actually use silver as a replacement.
Yeah, and it works pretty well in a lot of
It
cases,
doesn't,
but
yeah, it doesn't
there's
work as well as gold does. And like one of the things that gold's used in a lot, chips.
yes, yes, and
Your
silver
computer
does
chips,
not it can't really be replaced. Now it's not a huge amount of gold,
no.
but our need for chips has skyrocketed so much that if you like it's starting to be significant.
A microgram of gold in each, you know, set of chips that you manufacture adds up real fast.
It might not be, it might even be a milligram,
I'm just saying. Like
but yeah, it's
I'm just like trying to get the point across that yeah, it
sure.
adds up because of the sheer volume because you're not using very much. But yes, it does add up a lot over
But
time.
think about how many chips you have in your house. Think about every single
Mhm.
device that is smart or smart-ish. There might be some gold in that.
Actually, basically every device that you have in your house that utilizes electricity,
Yeah, that sounds about right.
they all have
Now,
chips
it
in them
might
now.
be microgram, might be milligram, depending
Hmm.
on size,
Very,
complexity, all that. But
it's very little. I mean, even even your fancy computer is still got very, very little gold in it, and it actually utilizes more than probably any other piece of electronics in your house.
yep.
But I mean,
But it's
if
starting
your
to be
coffee
used
maker
in
turns itself on and off, guess what? It's got a chip in it.
right, right. So you might have, you know, you in your house might in all
If
electronics you might have a few grams of gold, but
no,
that's in.
probably not even that. You should
I
watch
mean,
some YouTube videos where they actually reclaim the gold off of like uh, RAM chipsets is where it's used a lot. There's a
yeah,
lot
RAM uses
more
a lot.
because of those connections.
I also think in modern designs of graphics cards as well.
Yeah,
But
GPUs. But RAM is cheap comparatively to graphics cards.
yes,
And so you can get used RAM for basically free, like people just throw it away. And so there are people on YouTube that you can go watch where they go and they get a pair of scissors and they cut the teeth off of the RAM chips and they put it in this solution and they have to add this and then they
hmm,
filter it all down and it's nothing. I was like, oh, this is cool. Like you could make some gold. And then they got done and I was like, that is a lot of work for like nothing, nothing.
yeah, there's probably more value in trying to harvest the simpler, easier metals such as aluminum and copper
Yeah,
maybe.
maybe.
But um, no, I mean, but I don't know that there's that much. I don't know the percentages of that. Because I think I was reading about some of the semiconductors they're using are actually using some gold in them, which increases the amount of gold, and that may not be easily recoverable either.
Mm-mm.
Um, and that might be part of it. They're not recovering all of the gold; they're recovering 90% of it.
Yeah,
But
and I can confirm semiconductors do utilize gold in them.
okay, yeah, and like yeah, I think it might be a couple grams in everything in your house because
And I
there are a
only know that
lot of chips in your
be-
house.
because I happen to know that I can't remember if it's hydrochloric acid or if it's uh, um, liquid cyanide that will strip gold off of things.
I think it's liquid cyanide.
I used to work in a factory that cleaned the deals that they'd spray to make chipsets.
Hmm.
And I remember it intently because there are two wash baths in between. Because if you mix hydrochloric acid with liquid cyanide, it creates hydrocyanide gas.
That sounds unpleasant.
It's so dangerous that by the time you've smelled it, you've already overdosed.
That's nice.
So they have huge vent hoods running at all times directly above it, just in case it makes any accidentally. Yeah, it's safe, super safe.
Fun. Um, but no, I mean, like, there might be, there might be. Actually, I'm thinking. I was gonna say 500.
But
I might. There might be a
but who
thousand chips in
cares?
this room.
Doesn't
But yeah,
matter.
okay. So, but as a result of that, the amount of gold being used in practical uses, it's starting, and the amount of value in current monetary systems, having a significant gold-backed currency just doesn't really work.
Why not? Again, why not?
Um, well,
It worked whenever gold was worth $20 an ounce, and it works now currently at gold at $2,000 an ounce. I don't know why it wouldn't work in the future.
what do you mean it works now with $2,000 and it's not being used as monetary. There's no major currency is backed by gold.
Well, no, because we murder anybody who tries to start one.
Yeah, I wouldn't even say those are major currencies. Those are just, it's not even about getting back on gold, it's getting
Any,
off the dollar. But I
but
mean,
any currency. I mean, yeah,
there's a lot of complexity as to why we would murder somebody like that beyond just getting off the dollar. But I I did the math at one point, and it would increase the cost of gold by like, I think something like 2,000 times.
okay,
Um, and assuming that doesn't that is that ignores the disruption of trying to adopt a currency that size. So that's assuming a long, slow process.
sure.
Um,
Well, I mean, you have to think about it. The only reason that we've been able to have an economy that's this large is literally because we've printed it into existence. And because the US dollar was not tied to gold, was not backed by gold, tied to gold since 1970, what, 1, 2, 69, something like that. That's when you've seen all this inflation and printing of money and all that kind of fun stuff. This is the reason that the gold has not inflated along with it because it's not tied to it. If you tied it to it, you couldn't do the inflation that we do now because you couldn't just print
yeah,
money.
what
You have to go buy gold to be able to back that.
you would have significant economic issues that would make it. You'd run into significant issues of probably potentially run into significant deflation, which could be a problem, like a big problem, um, which would that could really hurt an economy permanently too. Like you could destroy a lot of value that way. Um, you would like you just don't have the fluidity that we have now. Granted, yes, it's being manipulated by
That's the
morons in office, but
but that's the point. The point of having a gold-backed currency is so that you don't have the fluidity, that you have something stable and solid to base your currency on, so that everybody else that you trade with can have a level of trust that there is something backed behind it.
yeah, and it would we'd be worse off with it if we had done that. Like that's the
What do you
reality
mean?
of it.
How so?
The economy, the production value of things would not have been as good as it was.
We, you mean the US
The globe,
or the world?
the global economy.
I mean, I disagree to a certain extent because I think that if you do that, you have to take that value from somewhere.
You have to take
So
take
if you're
do
if
what?
you're if you're inflating the currency,
Yes, yes.
who's losing the value?
Everybody that holds a dollar.
Okay. So why would that make the economy better?
It would make is complicated. So it would. I'm not saying inflating makes the economy better. I'm saying having a fiat currency when we transitioned off the gold into fiat versus keeping the gold was better. Now we're in the point where we don't care about. We've basically.
But why and how was it better? That's my question.
Um, we
Because
were
we
able
have,
to grow in real, like, actual real value terms significantly more because we didn't have liquidity issues. Just,
and I would argue that you're wrong on that.
you're, I mean,
Because here's the deal. Does it seem like that we are? Yes, it seems like that we are. But if you look at it, look at like, I'm trying to remember. I think it was like 1993 to 2023,
okay,
right? $1 million in 1993 would be the equivalent of 2.5 million today,
yeah, like,
right?
I don't doubt that, like, in recent decades, the U.S. has gone off the rails with inflation and has gone really, really bad, especially in the last 2+ decades, like 2.5 decades.
Right. But we didn't have any issues from like 1945 to 1973, 1971, whatever it was.
You're right.
There weren't any growth issues.
And I'm not saying we're not heading in an issue where it's going to be worse on net, but as we opened up the global economy, doing that in gold would have been so severely limiting that it would have been worse.
Uh, I mean, I don't think
Like,
so. I
we just
disagree
need
because it,
the depth of liquidity of the dollar is so much greater, and the world needed that.
uh, again, I don't agree. I don't think that that's the case. I think you would have just grown at a reasonable rate, and you would have been able. Like, we're destroying the middle class.
Yeah,
We absolutely in the U.S. we are absolutely destroying the middle class, and what we
we're
did by doing that and fiating everything is that we gave the ability for us to switch the US from a manufacturing to a financial economy or to a service economy.
yeah,
And part of that also was outsourcing all of our manufacturing to China in
yeah.
exchange for cheap labor. I would argue that if we had not done those two things, based on the fact that we could do them because we have fiat currency, that we would just continue to have grown. I mean, if you look at it, look at the 60s and 70s as far as like what the cost
Well,
of an average car was to what to what like an average salary was, and what the average house was to what an average salary was.
right, and
Asset prices have absolutely inflated astronomically.
yeah, and if we just didn't mismanage the fiat, things would still be pretty darn good. But in recent decades, we've horribly mismanaged fiat, and that is killing us. Now, if you want to, like, it,
It was always mismanaged. I mean, we only switched to fiat in 70. So for the first 23 years, you think we managed it well between 1970 to 1993?
pretty well, yeah. Now, I have some issues with the structure of it. Could have been designed better, and that's part of the problem we're running into. Is that we designed it in a greedy, arrogant manner instead of
Well,
one that was based on controls, which was what this country is built on.
I mean, look at it from a real standpoint. The reason that we switched to a fiat currency was because we couldn't, or we didn't want to satisfy our debts. France was holding US dollars, contacted DC and said, "Hey, we have all these US dollars. We don't have any use for them. We'd like the gold equivalent. Can you go ahead and hand that out?" We had already been using it like fiat prior to that, namely because of the Vietnam War that we decided to get involved in for God knows why, because Russia
I mean,
bad and stop
well,
communism.
communism is pretty bad, but
It is for people who live under it, yes.
yeah, I mean, it's yeah. Um, I don't know if it was Vietnam War per se. Some people point to some creative accounting on World War II stuff, but yeah, I mean I'm not sure, like the inevitability of going to a fiat system. I'm not sure like I'm not sure the causal effect being Vietnam is particularly
You're saying that it
relevant to
was
inevitability.
inevitable.
Yes.
Okay. I I
I
don't
mean,
see why that has to be or why that should be.
okay.
It allows
Um,
it, I mean, going to a fiat allows you to just do whatever you want to as a government. And do we really, I mean, like if we think about it, if you sit back
kinda.
and
I
think
mean,
about it,
it's
is there
the
any
current
time that you
iteration.
can think of that you can go back and point to between 1970 and now where the government has done a good job with money, where they haven't spent wildly, where they haven't spent extravagantly or exorbitantly, they haven't wasted funds?
I mean, can you go back to a time before then that they didn't?
Well, I mean, I- I'd have to go look and do some research, but I feel fairly confident that yeah, you probably can.
I mean, because it just seems like what they've always done, and that just seems like the will of the people. Is ultimately that's what they want, whether they like it or not. The will of the people is they want the government to be able to spend wildly.
I, I don't think that's the case. I think it was probably forced upon them, and they didn't really feel like they had much. I mean, you have to figure the amount of information that was out and available back in the day. You couldn't be as informed as you can be now.
Oh, sure.
So there's no way to know for sure like what your senator did or didn't vote for, and he could easily lie to you,
Yeah,
right? So so who knows? We don't. It's going to be hard to really tell, you
that's
know.
fair. I mean, I think going forward, I don't think that any commodity is going to be the good backing. I think a decentralized fiat solves a lot of the problems we've seen with corrupt fiats.
I mean, yeah, maybe. And
Um,
maybe that well, I don't know. The euro hasn't done so well.
okay.
It's been okay.
What's that? I'm not sure what that is in terms of.
I mean, it seems like it's more a more decentralized fiat, let's say that,
Oh, I'm not sure that it is.
but it may not be. Yeah,
When I think decentralized fiat, I think Bitcoin.
yeah, but that's
Bitcoin's a
not
decentralized fiat.
sure.
It's not backed by anything. Now, what it is backed by is the trust of the network, and which is no real different than the dollar, which is fundamentally backed by the trust of its usage network.
Right.
It's just not as well defined of a usage network.
Yeah, but I mean, correct. And I think that Bitcoin has a and I think other cryptocurrencies likely as well have use cases going forward. And part of that is going to be, I think, the digital economy. I just don't think that gold is going away as a store of value anytime soon.
No, I don't think so. There's some debate about
And
whether it is. I don't think so simply because it is a shiny,
it
durable metal.
right, and it makes sense that it should like I think it's if you look at the trend, it should be valued probably at least 5 times what it is.
Yeah, I mean, what market isn't being manipulated though?
Right. Silver has been manipulated for years.
Um,
Everybody knows.
but gold hasn't.
Right.
No, I
So
mean it's
there, well, a lot of it, like most people don't realize that most of the silver and gold trading that goes on is all paper trading. So
yeah.
like a lot of people buy silver or buy gold, they buy paper. It's just an IOU, and if that gets called due, there's not anything there to get it.
You hope that somebody can deliver on it, they're just it's the classic thing of when financial markets get the opportunity to trade paper and be shady, and then no one calls them on it because people just don't typically do that anymore, then it falls
Well,
apart. It's there's a lack of
eventually they do.
well, yeah, but just a lack of I forget what there's a lack of hygiene in financial markets. Like these good routines that keep things working properly, such as calling due on the paper goods that are supposed to be backed.
Sure. But there's
Um,
also, I mean, like, there's no good regulation to any of that stuff, like a good
sure,
quality third party outside organization. It's all eventually most of these things become corrupt at some point, and it doesn't matter whether it's an agency or if it's a government or whatever, because this stuff just happens. I mean, there was actually a oh, I can't remember who it was. There was a company here recently that was a gold and or silver storage facility so that you could buy gold or silver and literally instead of you taking possession of it and controlling it and having to worry about somebody breaking into your house and stealing it, there's like depositories around the
who
country that people that will do that for you. And somebody audited it and they found literal paper IOUs and empty vaults in some of the cases, and they got fined like because what they were doing is they were double dipping and they were selling and trading and stuff that didn't belong to them, right? Like you're not a
Oh yeah,
bank. You can't just like do fractional reserve. Like you,
this
it's
is
like, well,
exact.
I have 100 ounces of gold. I can loan out
I mean,
97 of them.
I I don't even really care if they were fractional reserve, except for the fact that they're selling on the fact that they're not doing this and that this is a hard asset.
Right.
So, like, if they
So
wanted to create a fractional reserve gold system, fine.
so
But
remember, kids, not your keys, not your coins. And I don't care if that's gold or silver or Bitcoin or ETH or anything else. If you don't have custody of it, it doesn't actually belong to you. Ask all
yep,
the people that were invested in different coins, had bought coins, thought that they owned them. They were on a centralized exchange called FTX, and ask them how that worked out for them.
yeah, yeah. Well, I mean, but
If
I
you
do
don't
think
know
some
that
kind of
story,
crypto.
that went. They were giving that money, giving and or loaning and or investing that money into a company called Alameda Research, who happened to donate hundreds of millions of dollars to the Democratic Party, and somehow neither one of the heads of either of those companies went to jail. I don't know how that happens.
Well,
It's magical.
I mean, I still think that cryptographic technologies are the future for this sort of stuff because it's going to enforce good behavior. But